I'm trying to find the right word to summarize this week. Is it the most dramatic week? It's the biggest earnings week? The job openings that surprised everyone? Or is it AI and ChatGPT? Let's summarize everything, and I'll even say one last thing. Guess what? The Nasdaq is back in a bull market. Hello everyone and welcome back to our channel. I'm Micha from our channel Stock Talk with Micha Stocks, where we post weekly summaries of everything hot that happened in the week. Let's dive in. And before that, if you're new to the channel, it would be great if you can hit that subscribe button. And of course, if you enjoy the content, smash the like button. Like every other YouTuber says, right? Let's go on. This is what happened in the last 5 days in the Dow Jones. Actually, it ended on the zero, like they say, unch, but the S&P up almost 2%. The Nasdaq, heavy on technology, plus 4.1%. Russell, the IWM, up 4.48%. And when we look year to date, look at the numbers. The Dow is up only 2.38%, but the S&P, 8.17% year to date. Nasdaq, 15.6%, and the Russell, 13.4%. This is an amazing beginning of a year, of course. And when we look at the European markets, which I usually don't cover, it's just to see that all markets are going up. Like there's no recession in the horizon, no rates going up. Everything is good in the world. And that was me being cynical, of course. This is how the crypto market looks like. It's the calmest of them all. Look at the Bitcoin, only up 2.5%. ETH up 7%. Year to date, both up 40%. Risk on? Do you need more signs for that? And why is risk on? We'll talk about it in the next few things. This is our heat map. As you can see, what worked best in 2022 doesn't work anymore in 2023. Look at the energy sector, which is here in the middle. Look at the healthcare here. United Health, one of the best performers in 2022. Red on the week. And on the other hand, you see Amazon, which didn't report good earnings reports, still green for the week. Microsoft, Google, Apple, and of course Tesla gaining back that almost 200. And if you all remember, about 6 weeks ago, 4 or 5 weeks ago, they were at 101. Let's dive into the different sectors. This is how they look like. These are the indices. You can see that communications is up 5.2% for the week and 21% from the beginning of the year. On the other hand, we have the energy spectrum, which is minus 5.7% from the year, minus 1%. You can see all the technology and everything, basically a mirror image of 2022. And when we dive in even deeper to the U.S. industries, you can see that retail, regional banks, home builders outperformed the oil, gas, and of course the gold miners this week. When we look at our top, let's call them popular stocks, you can see SoFi up 25% for the week. Meta, after great earnings, up 23% for the week. And year to date, both stocks went up between 61 and 55%. That is crazy. Going back all the way down to NEO, which didn't have a good week, down 11.9%, almost 12%, but up 14% for the year. Basically, amazing results for most of the companies. And you want to know why all this is happening, or where are the pockets that you see triple percentage gains? Well, this report I generated between the months of October and November. This was stocks with the highest short interest in the market. I generated that report just to see which stocks have the highest short interest. The reason for that is when there is a crazy face-ripping rally, just like we're having in the last few days, these stocks tend to outperform. But I didn't think they would outperform so strong. Look at App Harvest, ticker APPH, went up 314%. This is $257 million market cap stock. Look at Faraday and Carvana. Carvana is on the verge of Chapter 11, up 204%. We have Volta and Opendoor and Redfin and Coinbase and Mara and Peloton and Wayfair and Avaya and more and more. This shows us that the heavy shorted stocks were the ones that short sellers were covering, and on the other hand, there was a huge short squeeze while they were covering too slow, and they went up. This is not a healthy rally. This is a rally of extremes, which usually ends up badly. So be careful if you're trading these stocks. Make sure your stops are in order. And just a reminder, this is not financial advice. I am just a character on YouTube. That's all. Let's dive into the news. Are you ready for it? Let's start. This is Kaylee Lance from Bloomberg reporting a lot of signs on the payrolls. The U.S. gained 517,000 new jobs in the month of January. That is versus the estimate of 188. How is that possible when everyone's firing? So over 100,000 jobs were lost, but a lot of jobs were gained to a point where these are the areas, these are the pockets that gained jobs: leisure and hospitality, professional services, and government. On the unemployment side, we are now back to the numbers so low like they were in 1969. So if Jerome Powell wants to kill the employment, the employment or the unemployment, he has a very, very difficult job in front of him. Man, talking about Jerome Powell, he raised another 25 basis points this week. This raise, and of course the press conference afterwards, came as a bullish sign. You want to know why? Not because he raised rates. That's not bullish. Not because he wants to fight inflation. That's not bullish either. Not because he says that we might see a mild recession. He didn't say that on this press conference, but on the others. That's not the word that everyone counted. This is the word that everyone counted. Tom Lee from Fundstrat counted disinflation 13 times during the press conference. This is versus 0 times in December, which means that the Fed understand that disinflation is happening. And if disinflation is happening, maybe there aren't a lot of rate hikes in the pipeline. Maybe another one, maybe another two, but that's all. By the way, the bond market doesn't even believe that is gonna continue. They believe there might be one more rate hike in the pipeline, and that's it. That's how far the speech is from the market itself. And we had all these reports during the week. I'm not going to cover all the reports, just some of the highlights. AMD with a very strong report that shows that they took a lot of market share from Intel. GM with a strong report that when you dive in, there's a lot of, it's called financial magic inside. We have Meta that finally reduced in a dramatic way the speech around metaverse, where Mark Zuckerberg says that he is going to be a lot more focused on efficiency, where he doesn't want to see a lot of managers managing managers. He wants to reduce a lot of that. And of course, he is mentioning a lot more AI than he mentions metaverse, and the market loves that. Meta went up the day after 28%. It closed plus 23%. Amazon, Apple, Google or Alphabet, and Ford all reported, I want to say bad earnings, not good earnings. For the first time in 7 years, Apple missed expectations. Tim Cook in the call later said that they missed their expectations mainly because they couldn't produce fast enough. Now, I don't know who's in charge of their production, but it sounds like a very interesting excuse. The market loved that excuse. How do I know that? Because the day later, they were up 3.5%. Apparently, the market loves excuses. Google, on the other hand, is in the hot seat right now. We're going to talk, or Alphabet, we're going to talk about it, relate to ChatGPT and AI. And of course, Amazon still grinding, trying to find footing in 2023. This might be the screenshot that represents the craziness in the market right now. Bed Bath & Beyond, missing interest payment. They don't have money to pay, up 37%. Carvana, on the verge of Chapter 11, plus 32%. Beyond Meat, doesn't make any profit, plus 23%. Meta, we talked about, an upstart, up 26%. You can read why. This is the craziness. Are we back to February 2021? Ask Wasteland capital, well, face-ripping rallies usually look like that. And the reason for the face-ripping rally is that entering the year, and we saw this chart from Bank of America earlier this year, at the beginning of the year, fund managers were under-positioned U.S. equities. And this is where they were January 2023. They were underweight in a dramatic way. Even one of the investment firms, one of the 5 main topics or 10 top topics for 2023 says short the U.S. market. When the market starts going that fast, they get their FOMO as well. It doesn't only happen to retail investors, it happens to everyone. That is part of short covering and, of course, money coming in to the market. Mike Wilson from Morgan Stanley went to CNBC and to Bloomberg saying, guys, stop this craziness. Don't buy the rally. The Fed is serious. Well, doesn't seem like a lot of people listen. And the IMF says that he sees the economy going back to growth, actually states that the U.S. economy's growth is going to be lower than other economies, stating India's economy as the fastest, but he sees that. European zone, or actually the Eurozone, dodged a bullet, dodged recession. That's why Christine Lagarde is that happy, but on the other hand, increases their interest rate to 3%, increased by 50 basis points, and also the Bank of England increased to 4%, also 50 basis points. And now let's talk a bit about AI and ChatGPT. Amazon tells employees don't use ChatGPT. Employees tell Amazon, why not? It makes our life easier. So employees at Amazon use ChatGPT on a daily basis. Baidu taking ChatGPT and installing a Chinese rival to ChatGPT. Anyone that doesn't know, Baidu is like the Google of China. So they're going to have their own version. C3AI, ticker AI. The stock ticker is AI, integrates ChatGPT into their suite. We're seeing more and more press releases of companies that are integrating ChatGPT. And ChatGPT right now is training the models to write code instead of coders. So it means that the coders are basically creating their own replacements. Interesting, right? Microsoft takes ChatGPT into Bing probably in the next few weeks. I'm not even sure it's called Bing or Binge, or I have no idea. I hope they're going to change the name of it because that name didn't really work, but it's clear that they're going head-to-head with Google on the search, and right now their hand is on the upper hand because everyone's talking about ChatGPT and not about what Google does. But there's a long wait time for ChatGPT. You can go in and try to use ChatGPT and see that too many people are using it. So OpenAI had an amazing idea. Why not charge people? For $20 per month, you can get general access, you can get fast response time, and you can get priority. If you can make money, why not make money out of it? And Microsoft and ChatGPT, so Microsoft is integrating it into Microsoft Teams. Now you can get through Teams the ability to generate automatic meeting notes and AI recommendation tasks and personalized meeting templates and more. Microsoft, like I said, going all in on their integration with ChatGPT. Finally, they have a way to penetrate the dominance of Google, and they're not giving back on anything. And Google, don't say anything bad about Google because Google now takes Lambda, which is their ChatGPT option, up to the open. How do I know that? Very easy, because on February 8th, 8:30 a.m. Eastern, they're going to have a live on YouTube, the best place to have live streams, of course. They're going to have their live talking about using the power of AI to reimagine how people search, explore, and interact with information. The heat is on. Everyone is talking about AI. And just to give you the interesting data points, when Google reported their earning last quarter, they mentioned the letters AI 18 times. When they reported on Thursday, they mentioned the letters AI 54 times in their earnings call. Yes, I counted. If you go back to Microsoft, last quarter, Microsoft mentioned AI 8 times. On this earnings call a week ago, they mentioned it 28 times. Everyone is talking about AI. Everyone is talking about ChatGPT and generative AI. Let's continue. And the button isn't working, and we are back. To the less happy portion of our summary, layoffs. In the last 24 hours, Carl Quintanilla, last 24 hours for him is February 2nd. So February 1st, again, a wave of layoffs. NetApp laying off 8%, HubSpot 7%, PayPal 7%, Workday 3%, Impossible Burger 20%, Impossible Food 20%, Intel reducing pay, Splunk reducing 4%, Pinterest reducing 150 jobs, Rivian reducing 6%, DraftKings reducing 140 employees, and on and on and on. And that didn't stop the NASDAQ from going up 23% from the bottom. And by that, entering a new bull market. Now, is this bull market going to stand, or was it a fake? Is it a dead cat bounce, or any other terminology that people use in the stock market? Well, facts are the facts. If we put on a line chart and we connect the lowest point that we were to the highest point that we ended, NASDAQ was up 19.85. And if we go to the lowest point during the day on October 13th versus the highest price point of the day, which happened February 2nd, we were up 23.3%. Are we in a new bull market and no one told everyone? I remind you that fund managers and institutional managers are underweight U.S. equities. We're going to talk about the S&P in a second, but if this continues, the rally is going to be even with a lot more force, a lot more face ripping because they are underweight. There's a lot of cash in the sideline. That money needs to enter, and I'll show you what is the number you need to follow. Let's keep on going. And where's craziness in the market? Ryan Cohen is in the middle. Ryan Cohen takes a sizable stake in Nordstrom. JWN is the ticker. Nordstrom, the retail chain that has also financial issues. When there's financial issues, there goes Ryan Cohen. And of course, the stock, loved that, went up 25% the same day. And this also came back Friday by 5:55 p.m. The jury's back. Elon Musk is found not liable for his 420 funding secured tweet. Just a quick recap. On 2018, Elon Musk didn't try, it doesn't really matter, to take Tesla back being private. He tweeted that he's going to take it private for 420 and funding is secured. Someone sold the stock for 380. And when it didn't go private, that person who sold at 380 is the one that sued Elon Musk for, manipulating the stock or something like that. Well, the problem was that he sold for lower than the price. So basically, what are you complaining about? But nevertheless, he's not liable. More Tesla news is that during Friday, Ford and GM's pressure on the Biden administration worked, and the cap for SUVs went up to $80,000, which means that the reduction of price that Tesla made a month ago is not needed anymore. Same second, Tesla raised prices by $1,500 and $1,000 for some of the models, and some stayed low and even went lower. So Tesla is using her pricing power and mainly her margins to lead the market. Right now, inventories are very low, which means that there's a backlog. You need to wait between 4 to 12 weeks, depending on which model you're looking for. And we are still, as Tesla investors, waiting for the competition. It's supposed to arrive, but there must be a traffic jam somewhere. This is what's going to happen this week. Pinterest, and I marked the ones that I'm interested in, but of course you can screenshot this and maybe you're interested in other stocks as well. I'm interested to hear Pinterest and Chegg. I'm interested to hearing Royal Caribbean and Enphase, and of course Chipotle. I'm interested in hearing CVS and Uber, and of course Walt Disney Affirm, Digital Turbine, Hood, and MGM. I'm also interested in hearing Pepsi, PayPal, Cloudflare, Lyft. A very, very interesting week. And from an economic perspective, there's one thing you need to know about this week. Fed blackout ends. all Fed members can start talking, and they're going to talk a lot this week. They're going to explain to everyone what they think about the future. Do they think that we're going to 7%, or were they the ones that tried to stop everything? We'll hear all the Feds during the week. And that brings us to the same chart we've been looking at for the last few weeks. Was there a breakout? The answer is yes. Does it mean we will not come back? The answer is I have no idea. I'm not from the future. What I can tell you is the following. 4,000 on the S&P or 400 on the SPY, which is the ETF trading the S&P, is the line in the sand. If we drop underneath the 4,000 and we're not able to recover very, very fast, it means we're back going down. If we're able to stop at the 4,000, turn around and keep going up, this would be a huge indication that we're going up. From a technical perspective, there's another thing that I want you to be aware of. There is something that's called the golden cross. The golden cross is a situation, or actually an instance, where short-term moving average, in this case, the 50-day moving average, it takes an average of the closing price in the last 15 days. This is the green line. When it overlaps the 200-day moving average, again, the longer term, 200-day moving average, 200 closing prices back, it takes an average of them. When it goes above the 200 days, it means that on the shorter term versus the longer term, we created a momentum that is called the golden cross. Why am I sharing that with you? A golden cross is a great indicator of the fact that we have changed course. We have changed course in the shorter term. In the last 50 days, we're in an uptrend. You can see the moving average, which is basically an automatic way to create a trend line. We are moving up versus the 200 that is still going down. Why? Because it's a longer term line. It's an indication for computers, which today dominate the trading, the trading in the market. It gives them an indication that we are back into an uptrend mode. This happened in the last month, in the last actually 3 weeks, with a lot of stocks which changed their trend lines from going down to going up. This is another indicator that we might have reached a bottom. And also, again, if you're not technical by nature, I want to show you something else. There is a pattern called head and shoulders. Yeah, just like the shampoo. Let me hide the trend lines for a second and I'll show you. Let's hide everything here and I'll eliminate the moving averages. There is, and I'll change this to bars. There is a way to look at the charts and identify a trend line change, a reversal. That is called, like I mentioned, a head and shoulders. Now, a head and shoulders usually is a topping formation. A topping formation means that, I'm going to flip the chart for a second just to explain, which means that you reach the top that you cannot penetrate and you start dropping down. That's when you're in an uptrend that changes to a downtrend. Same thing happens when I'll go back to what we really see right now to where we are right now, which means we are creating higher lows and higher highs, which means that we have now, according to what we see right now, and remember, this can change on a dime, what we're seeing right now is something that might be resembled to a head and shoulders. This is the head. These are the shoulders. Now, am I sure this is a head and shoulders pattern? No, you can never be sure until you're way up here. But you can start thinking, what am I going to do? How am I going to deploy capital if we are back to a bull market versus a bear market? Are we there yet? The regular question that any kid asks their parents when they're in a long drive. I do not know. What I do know is that every week we will be here summarizing the week with the news, with charts, and everything that is relevant. One request, if you enjoyed, smash that like button. And in the comments, you can write down things that are more important for you in the weekly summary. Maybe there are things that I'm missing here. Till next time, till next week, I'm Micha from Stock Talk with Micha Stocks. Bye-bye.